Welcome to another video that I am creating on Candlestick, and this one is on Candlestick Doji Pattern. If you have been trading for a while, you know that Candlestick Doji is one of the very popular pattern, and if applied or if used correctly, the Doji pattern can yield a lot of profitable trades. Now, if you have been following my channels, I have posted some other videos also on the Candlestick pattern. So feel free to check those out, and in fact you can go ahead and subscribe to my channel as well. So let's get started about the Candlestick Doji pattern. And in this video I'm going to tell you what is a true Candlestick Doji pattern, how to identify it, how best to use this pattern, and when not to use it. So without much ado, let's get started. So this is what multiple kinds of candlestick pattern look like. If you see here, some of these candles have normal wicks, some have large wicks, some have one-sided wicks. So what does a doji mean? Doji means that the market is currently in some kind of indecision. The buyers and sellers, they basically are trying to push each other, or it's more like a tug of war. When the buyers are trying to buy or move the currency pair or the stock in a particular direction, the sellers are resisting it, and vice versa. For example, in the bearish market, if the sellers are trying to sell it, now buyers have gained some strength and they're trying to push the sellers back. So doji represents some kind of indecision. So any kind of such pattern that you see, even if the wick is very big or the wick is very small or wick is one-sided, it just represents that the market is having some kind of indecision. So typically, if you see the body of a doji pattern, it's a single line. Ideal doji pattern, it has a single line. But in some cases it may have some body, so such kind of candlesticks are a good doji pattern too. It doesn't need to be, ideally it has to be a single body, like the market has not moved at all. But even if the body is, let's say, this much big, let's say 5 or 6 pips, or in the stock market, like if it is the body is slightly bigger than a line, that's fine too. It means that market is still facing indecision and they try to move in some direction, but they're gaining resistance. So this is what a candlestick doji pattern is, and it represents some kind of indecision. But let's look at how to best use it. Now, a candlestick pattern, if you look at a doji pattern rather, if you look at it, it makes more sense when it comes in a particular run. For example, if you look here, the market is making a down run, and if you see here, this is a doji pattern, this is a doji pattern, and this is a doji pattern. But these two doji patterns are much more significant as compared to this one, because this doji pattern is coming when the market is having some kind of indecision here. You see a blue candlestick here, which is for up direction, but immediately a reversal candlestick has come. So market is anyways deciding to go in a downward direction, and this candlestick is not going to help you at all to decide whether you should be putting a long trade or a short trade. But if you look here, the market is going in a downward direction, but this candlestick comes, it means that now market has come to a point where it is not sure whether it wants to continue in the down direction or whether it wants to go in the upward direction. Same here. If you look here, this is also continuing in the down run, and this means that market has again hit some kind of support or resistance level, and the market is not sure which direction it wants to go to. Now, but the difference between this candle and this candle, this doji pattern and this doji pattern, is there's no confirming indicator after that. If you look here, this reversal candle is more like a hammer. It has got a very long wick and the body is smaller than the wick size. So it may mean that the market tried to go in this direction, but then the sellers they pushed the market back and it closed here. And the next candle, it was a bearish candle. Again, so market is not sure whether it wants to go in the downward direction or it wants to move in the upward direction. But it again moves slightly in the downward direction, and then it hits this support and resistance level. If you look here, this was a low that was made by market, which was a 38.2 fib level from this run, and then the market hit that and made a double bottom. And then the next candle, if you see here, this is a confirming indicator, because if you look at this candle is quite big. The body is quite big. In fact, the body is closing above the high made by the Doji candle. So this means that the market has made up its mind and want to continue here. So ideally, that what the trader can do is, whenever they see such kind of confirming candle, they can open a trade when this candle closes with a stop loss 10 or 15 pips below the Doji candle, and that's how they can open their trade. So Doji makes, let me summarize the points I was just making, that Doji makes more sense when it appears during a run. To use Doji in a trade, always use a confirming indicator. In our case, it was a support and resistance level, as well as the following candlestick. And so yeah, the confirming indicator can be another candlestick like a support and resistance level, lagging indicator such as MACD or relative strength index. Now let's look at another point which covers when not to use the Doji candlestick. A Doji candlestick will make more sense on a higher drive if used on a higher time frame. Like for example, if you're using a 1 hour chart or 4 hour chart or daily chart, or even a weekly chart, but they are not as effective as 15-minute chart or on 5-minute chart, because in 15-minute chart or 5-minute chart, the Doji occurrences will be way too common. Market doesn't always, even if the currency market is open for 24 hours, it doesn't mean that there will be all the 15-minute or every 5 minutes you will see some kind of major activity happening. There will be some times when the market is not moving at all. In such times, you will see a lot of Doji patterns. So Doji patterns are not that effective when you use on a lower time frame. They are much more effective when you use on the 1 hour chart or 4 hour chart. So that is point number one. The second is, trade the Doji pattern only if you have a confirming indicator, but if you don't get a confirmation for 5 to 6 candles, or when you're using a Doji pattern which requires a bigger stop loss, don't use it. Here's what I mean by that. If you look here in this particular chart, this is where the upward direction came, like the upward run came, and this is a Doji pattern, classic Doji pattern with no body and bigger wicks, but there's no confirming indicator. If you look at this one, this is not a confirming indicator, because again the market tried to move in the downward direction, but the body of this confirming candle is quite bigger than this wick. Quite smaller than this wick. So this is not a confirming indicator at all. But when this candle came, this was a good, to be honest, a good indicator to take a trade. But if you take a trade here, you would have opened a trade here, and your stop loss would have been 15 pips above here, so which could have resulted in about 90 to 100 pips stop loss, which is far too big to take a trade. So I'm not saying that a trader could have come to know that okay, the market would have gone in this direction again. It could have continued here, but it was too risky to take a trade because the stop loss itself was 90 to 100 pips. So like in trading, opening a trade is important thing, but another important thing is to make sure that you have good money management principles. So this was a too risky trade because like I mentioned, the stop loss was quite big. So these are some of the fundamental things you may want to keep in mind when you are using the Doji pattern. So yeah, another thing I wanted to say is that since you have watched this video for this long, I just want to thank you for giving your time, your attention, and as a gift to you, I'm about to give you details about two more highly effective Forex candlestick pattern. One of those is as good as Doji pattern, and I can also let me also share one more one highly accurate trading strategy that you can use, which is purely based on candlestick. That is something like you can start using the very next trading day. As well as, let me tell you one very common candlestick mistake that most of the traders make, and that is a mistake like I mentioned, that it is about 50% plus traders which are making. So all this is I'm as a gift to you. I'm giving as a gift to you. All you have to do is go to this my website forexcandlestickmagic.com and claim your gift. So thanks again for watching this video. Visit my website, subscribe to my channel if you like this video, and if you visit my website, like I'm saying, that there's a free gift waiting for you. And feel free to leave your comments at the bottom of this video, and I'll speak to you in the next video. Thank you.